What is going on, you guys? It's BJFX. Welcome back to the channel. I'm coming at y'all with a brand new video, man. And in today's video, I'm going to be taking y'all through some trades here that I personally took throughout the last couple of weeks in the markets. We're going to go through some before and after pictures. We're going to look at some very clean entries, and we're also going to go through a couple of losses that I took here. And I definitely think that there's a lot that I can give to you guys in this video. I definitely think that you guys can learn a lot here, because January has been the first losing month that I've had in a very, very long time, right? And going through this losing month definitely taught me a lot about myself. It definitely taught me a lot about the markets. And coming into a new month here in February, I'm definitely at a different place now mentally, and it's taught me a lot, and it definitely caused me to level up my mentality. And that's the thing about trading. You know, trading is an everlasting game of self-improvement. You know, the second that you remain stagnant in these markets, just know there's another trader just looking to take your spot, man. So I just need to keep my head on straight. I need to remain focused, and I definitely think that you guys can learn a lot here from what I've experienced throughout the last month in the markets, right? So January, for the most part, I'm down around 4% on my main account, and I'm down around 30% on my challenge account, right? So my challenge account at one point was up around 200+%, and my main account is still, of course, up for the long term, right? So keep in mind, man, like when I say a losing month, it's just a losing month. I'm still up for the long term. I'm still profitable long term. December was actually a very beautiful month. It was an amazing month in the markets, but really ever since, I would say, Christmas passed, right? Once volume kind of slowed down a little bit, and the holidays pass, I feel like, man, just GJ has been acting very, very weird to me. And by no means am I using that as like an excuse for why it's a losing month or anything like that, but just the pair has been acting weird for me. But I know a lot of traders have been saying the same thing. But for the most part, man, just gotta stick to the plan. You gotta maintain, because the market's always gonna throw curveballs at you. You know, eventually it's gonna do it. You know, when you are in the trading industry, and you're taking trades week by week, eventually it's going to get to the point where you do have a losing week, or you do have a losing month. And that's just the game that we're in. You know, we're speculators. We predict potential price movements, and as human beings, man, as human nature, sometimes it's easy to get lost in your mentality of not really wanting to take L's, you know. And most people at surface level, it's like, okay, I know loss is a part of the game, but once you stack up and you have that one loss, it's like, okay, it's just an L. And then you have the second loss, and it's like, oh, it's just another loss, I'll stick to the plan. And then you get to the third loss, and the more that you lose, it's literally a compound effect, and it's snowballing into all your trading decisions. And at some point you begin to make irrational decisions. You try to make the money back, or you try to rush trade. So the most important thing, man, is to stay conscious of the way you feel when you're, you know, on somewhat of a losing streak, and understand, man, that like even the top investors, you know, the people managing the most capital, I'm talking hedge funds, they go through losing months. They go through months of drawdown, weeks of drawdown. So you as a trader, I feel like the most important thing is to sit down. Like if you are going through like a losing week or something like that, the most important thing to do is sit down and ask yourself, like, am I going through this losing streak because it's something that I'm doing wrong? You know, am I being impatient? Do I have too much fear? Am I being greedy? Am I moving with indecision? You know, that's things that you can ask yourself. And if you say yes to any negative emotion when it comes to trading, more often it is negatively impacting your overall result from the market. But if you ask yourself this, and you tell yourself, you know, am I sticking to my plan? Am I managing risk? Am I getting into the markets when I should be? Am I staying patient? And if you answer yes to all of those, then quite frankly, it's possible that the market's just throwing you a curveball. You know, if you enter 1,000 trades throughout the last, I don't know how long it could be, but like let's say you enter 1,000 trades, because it's different for everybody. Eventually, somewhere along the line, you might have like 5 losses in a row. You know, that's just profitability. You could be flipping a coin, heads or tails. You can get 5 heads in a row. You know what I mean? So the most important thing here is that understand that at the same time, you know, we want to make money, but it's also a game of probabilities, and we want to try to stick to your plan the most that you possibly can, and try to remain mentally balanced through it all, because I feel like there's a lot that I can give you guys throughout what I've experienced this past month in my trading. So yeah, man, we're gonna go to some, and I don't want to talk too long about the losses, but that's kind of what I had to say, man. Like, understand losses for what they are. Journal them helps a lot. I got this journal right here, and for the most part, man, just continue to remain focused under all circumstances, and try not to act according to how your trading's going. If you take a loss and you get sad, that's usually going to stop you from executing on whatever you have coming next in the markets. Understand that if you miss the opportunity, there's always another one setting up, man. But let's not waste no more time. We're gonna go ahead and we're gonna go through some very clean entries. We're gonna go through some very beautiful markups, some before and afters, and we're also gonna go through a couple of losing trades. But like I said, I'm not like insanely down for the month, but it's definitely something different. The market definitely threw me a curveball because I kind of got in this headspace where I was getting used to profitable months and I was getting used to pulling money out of the market. So it happens, man. Every trader has them, and you just want to stick to the plan. You want to manage risk, and you want to know exactly what you're trying to get out of the market. So I try to look at everything long term with it, right? So to go here to the chat really quick, you can see that this was January 17th. I posted the GBP USD forecast. Now this is what my markup was looking like. You can see we had this little bit of consolidation. You can see that we touched a strong level of demand, and then we pushed up. We created this point of interest for longs with the trend, right? So if we go ahead and we look at the markets overall for GU, you can see that the overall sentiment, most people would say that this is a very, very bullish market. You know, you can see that the market here took out not only this significant high here, but also this significant high. So for the most part, market is moving very, very bullish. Now, when it comes to me looking at the charts, I want you guys to understand that, or really in general, everyone looking at the charts, even though most people would think everyone's buying, it's time to sell and pick up their liquidity, it's also kind of counterintuitive to the way that most people think. Is that most people are probably looking to sell right now. When the market is very overextended, most people are probably looking to place sell positions in the market. And not only that, we also have somewhat of an equal high. Equal high is created right here around this level. So understand that depending on market circumstances, you could use little clues to see whether you want to go with the trend or against the trend. So in this point, you can see that we did create this strong level. You can see that price kind of somewhat reacted strongly here as a potential level of demand, and we failed to create any type of equal lows here around this candle on GU, right? So what I'll do is I'll map this little area out, and that was going to be our first really strong level that pushed us back up into these highs for GU, right? And then we could also put this little Bitcoin logo, and that potentially means that there's just going to be resting liquidity, right, in the markets around these equal highs. So these equal highs are now a signature area, right, a point of interest. Maybe you could see price run the highs, and then from that point you could sell. But I almost never enter sell positions when equal highs are going with the flow that I want to see the market move in, right? So in this case, you can see that we have this down candle, and this was potentially going to be my area of interest right here for GU. So what I could do is I can actually go ahead and put this little logo here, and that was just going to be an area of interest, right? So I'm not potentially saying I was going to buy from this price, or I wanted to see price, you know, under every circumstance push up, but I just wanted to watch it, right? So on a 4-hour time frame, once we approach it, I wanted to go ahead and see how price acted, and potentially I was going to look for some type of longs here, right? So going ahead and looking at what happened on GU beforehand, you can see that we created somewhat of equal highs again. Not necessarily like a perfect set of equal highs, but we did create them and then take them out. So I want you guys to look at the overall structure here, and you can see that the market most likely picked up some buy orders. It came down for the retest, and it pushed back up into this high, right? So come out for the breakout, pulls back, retest, creates an equal high, and then from this point we kind of just consolidate, right? We don't really do anything crazy. Market is kind of just in a consolidation phase, and then it meets this strong level of demand. From that point, we pushed up back into the highs again, and then we're coming back down into this level. So if we come over here and we pull this back to here, you could see that this is what the market structure looks like ever since we became bearish, right? This is what it began to look like. You can see that we did have this little area of consolidation. Some people just call this like an accumulation area, and then the market pushes up to this, or pushes down in this case, right, to this low here, and then it pushes up to this high, and from that level it would come back down to like a significant level below the previous range, and then from that point you would look for an entry, and then your stop loss would be something like that, and you would potentially target back to the upside, right? So essentially, when I'm mapping out this structure here, this is just a more advanced way of looking at something like this. So the books are probably going to teach you impulsive move, correction, another impulsive move, then you take the fib from the high to low. And essentially, I'm not going to say anything's wrong with it, because you could go to your charts and you could see something as simple as this happening and then you taking the fib. But like I said, something I like to do is I like to take in consideration these other factors, right? The fact that we have resting liquidity above here, the fact that we have what most people would call like an order block or just a potential level of demand, and then we have a strong demand from this level, right? And then from that point, entry will be here. But once again, this will just be a point of interest on the lower time frame, right? And then to come over here real quick, I actually got this little screenshot for you guys. This is known as the 24-hour market maker cycle. Now, the way I like to look at it, I don't necessarily say that it always has to be 24 hours, because the markets are very fractal, right? Essentially, what you see on the higher time frame, you will see very, very similar scenarios on the lower time frame as well. So structure is structure, in my opinion. There's people looking to enter trades on every time frame. So for me, I would even like to see something like this on the 1 minute or the 5 minute or even the 15 minute. So for me, it doesn't always have to be 24 hours. But as you guys can see, this will be like an accumulation phase. The market creates a low and high of the day. It raids through and pretty much takes liquidity from the upside and then the downside, and then continues back in that upside direction. But in this case, you can see that it pushes down first and then moves up and then creates this area of interest. And then from that point, I'll just essentially be looking for an entry, right? So what we'll do is we'll clear everything up here, and we're gonna go ahead, we're gonna go down to the 1 minute time frame, since we're now moving in my area of interest. And then one more thing I want to point out is that we have a trend line, right? You can see that price is now closing below the trend line. So back to what I was saying, right, about retailers all having different sentiments. You can see that we have a double top, and we also have price closing below this trend line. So once again, this is picking up more selling pressure. Potentially, we now have people who want to short the market. In this case, I just wanted to buy it. Now, like I said, it's all going to depend on individual circumstances, because the market is very bullish. But since we did create the equal highs, it would be a solid reasoning for me to look for longs. And then once again, it's just a point of interest. I don't have to buy it. It's just all depending on what the lower time frame shows me, right? So to go down to the 1 minute really quick, you can see that we now have somewhat of price just kind of creating a consistent lower low, lower high into our overall zone here, right? So if we press play, all I'd want to do is see what price does. Okay, so from this point, you can see that we did go ahead and almost break structure here on GBP USD. And from this point, I think it definitely would be fair for us to go ahead and go long somewhere in this area, right? So you see we have a little bit of reaction from this point. Let's go up to the 3 minute really quick. I would say that it would be ideal, right, to go ahead and go short. Let me check this out for you guys really quick. To go ahead and go short around this level here on GU, okay? And we'll see what price does actually. Okay, so now we're coming up making higher highs again in the market. But one thing I want to show you guys is typically you'll see some structure like this. So the market will come down, it'll create this level, it'll give you its first pullback, and this usually is what I call what's the word for it? I forgot the name of it, but yeah, it's usually like the fake pullback. You could just call it that, right? And then you make equal highs, and then you have your true pullback, which is typically deeper into a range or into a down candle or something like that. So for me personally, I would probably put a buy position here, and I would put a stop loss probably around 6 pips, fairly tight stop loss. And then for my take profits, I would just essentially look for some previous area to target. So maybe something like this, maybe something like this. And then long term, of course, we can target equal highs. But me personally, I'm not really much of a swing trader, so I wouldn't be looking to hold a position that long in the markets, right? But then at this point, we do potentially have us a pullback coming here in the market, so we'll see. And then from that point, entry is triggered, and we would essentially just let price do its thing. And then once we get some structure broken, right, see how that we broke this level of structure, stops would then be moved to break even just like this. And for me personally, my targets, like I said, would probably be somewhere around here, maybe 95 pips, maybe even just above these equal highs right here. If we map this level out, I would probably just target this area essentially, and it would look something like that, and that would probably be around 81 pips. And then, like I said, from there trade is going to be risk free, and we are now moving up a very decent amount on GU. But now GU was something I personally didn't even take here, but it's just the way I would have approached it, and we'll see if this wants to go ahead and play out and hit TP. And boom, there we go. So take profit was then hit from there, and I would have secured profits. Now, for me personally, I actually ended up trading GJ instead of GU. But if we come back to the Telegram really quick, you can see that we had equal highs. We had liquidity from the upside, right? Potential contraction, expansion, point of interest for longs, right? So next is going to be Euro JPY. I'm not really going to get into Euro JPY because this really didn't give us any opportunity to enter on a lower time frame, but it did come right up to the POI, and I'll go to it really quick for you guys. Let's go to Euro JPY, and yeah, you can see that we literally touched the first point of interest, literally right on the pip, and this ended up rejecting like 80 pips or so. And let's see, when did I post this? This was also posted on January 17th, right? And it came out to the POI, it rejected nicely, but really quick, just real quick, I'll take y'all to the 1 minute, and you can see we literally reacted perfectly. But for me personally, I didn't really find like an entry in this, you know what I mean? But to go back to GU, just to give you guys a quick update, you guys can see that we literally pushed all the way up here, 200 plus pips from that point, which was very, very nice. And then if we take off replay mode, yeah, this is where GU is currently. So 200 plus pips off the zone. If I wanted, I could have held this long if I got an entry, but like I said, I entered on GJ instead for this one. So to go down, you can see that this was a signal that was sent on January 18th for GBP JPY, right? So to go ahead and look at the chart on GJ, you can see once again we were very, very bullish on GJ. So what I did was I mapped out this level right here to see if price wanted to potentially fail to make any type of equal lows. And I also mapped the bottom of the zone out right here, and this would be my potential point of interest here. And then once again, we still have equal highs on GJ, and keep in mind that the GU setup I just took you guys through, this is going to be happening at the same time as this GJ setup. So I decided to enter on GJ as well because I'm just more fond of the pair, you know what I mean? But looking at what we got here, we now have liquidity potentially to the upside on this pair, and we have price moving into our point of interest for a potential long position. So now that we're in here and we begin to push to the downside, what I did is I just want to see some type of structure being broken. Okay, I want to see some type of structure being broken. I want to see some type of entry opportunity here on the 1 minute time frame, and you guys can see that we take out a few levels of structure here, and we have a break of structure slash BOS. And then from that point, I actually decided to get an entry in at 140.406, right? So 140.406 was the entry, and then stop loss was at 140.341. 140.341, and then take profit was at 40 pips, right? So 40 pip take profit. And for the risk to reward on this one, this was a 1 to 6.15 risk to reward. And like I said, this is very simple structure, right? So you have the market coming down, making this low, making another low, giving us a simple breaker structure, and then essentially I'm just entering on this last down candle before the move up. And then you also have what people would know as the Kasimoto pattern, right? Y'all let me know if I'm pronouncing that wrong, but the market essentially just makes this low. It comes down, it makes a low here, it'll give you a point from this area, it'll break structure, and then it'll come down. So it's not really as much of a head and shoulder, because a head and shoulder will be this. A Kasimoto pattern would just be something like that, where price essentially gives you a breaker structure. So that's what we have here, and the market is now coming down to my entry, and you can see that we come up here and we probably pick up some sell orders essentially right here on that retest, and we show a little bit of selling pressure. And then as long as the market fails to create equal lows, or at least show some reaction to this level enough for me to go risk free, I would then look for just look to continue to hold the trade. Okay, Okay, and then from that point we have a decent formation, and then we have another break of structure to the upside, and at this point my trade was risk free, right? So this was before, this was after right here. Once we get triggered in, then this was my entry, buys placed around that price, and then at this point is actually when I went ahead and I took partials, right? So we go ahead and we map this zone out. I did take a little bit of profits off the table, right? You never want to forget to pay yourself a little bit, because I found myself in a lot of situations where I was running at like a 1 to 10 and I just didn't take profits, and went back to break even. So you always want to secure partials around significant levels, but it all depends on your approach. Some people don't believe in partials. I personally like to at least take a little bit profits from time to time on my positions, right? But once again, it all depends on the individual circumstance. And then from this point we go back into very nice profits, and I'll show you guys why taking partials in this case was actually very beneficial, right? Because of this reason right here. Around 7 in the morning we come down and we literally tap this next potential area here, which was showing us a potential level of demand, and then from that point we get very bullish, I believe, for GU or GJ. We get very bullish here for GJ, and we once again take out highs, I'm pretty sure, but we'll see. Yeah, so there's our highs being taken out in the market, and then finally take profit should be hit very soon. But once again, I did get taken out at break even with the rest of my position, but luckily I did secure some partials right here around this level, right? So to wrap GJ up, very simple trade. Just wanted to align everything with the higher time frame point of interest, and then went down to the 1 minute, got my entry at 140.406. Market comes back down, mitigates my position after I take partials, and then we hit final take profits at 1 to 6.15. But like I said, I wasn't in the trade at that point. If you would have decided to keep your position open and not move your stops up, you would have been fine. But like I said, there's risk to reward to everything, right? But there's GJ on the 30 minute. Then if we come back to here, GJ currently fighting its demand and blue screens and nice profits. I'm making GJ risk free right at this point. We go into clean profits even more. We're just continuing to fly. And GP JPY wick fill in the 5 minute time frame, potentially showing signs of our TP being hit soon at a 1 to 6 risk to reward if we get some volume coming in for New York session, right? And then we don't really got to worry about that message. But GBP JPY signal went in a good profit, secured partials, and came down to tap my entry out before hitting final targets and flying to the upside. Then we also had GBP JPY gave a 90 plus pip push off the POI sent last night. So this was GJ's entry. If we would have held this, that would have been beautiful. But you want to try not to get too caught up in what could have happened, because you're always gonna be able to have caught more, under a lot of different circumstances. So you just want to understand, my targets were here. So from this point, we did what we had to do, walked away from the position with money in our pockets, and then from that point we push up very nicely. And then GU 90 plus pips, and as you guys can see from earlier, this actually ended up going over 200 plus pips in profit from the POI, but I didn't mess with GU. I just wanted to trade GJ, right? So the next signal we got on GJ is going to be some more longs, right? So we're going to come over here really quick, and GJ was very bullish, so I really didn't want to fight. I didn't want to fight against potential buys on GJ, because we did have the COVID vaccine. We had a lot of fundamentals driving price to go to the upside, right? When you're trading GBP JPY, obviously if the GBP is stronger than the JPY, it's going to make the pair go up, right? So if GBP is stronger than JPY, it's obviously going to make the price raise. If GBP is weaker, right, than JPY, and that's basically just going to mean price is going to want to go down. Now in this case we did have the COVID vaccine giving us a lot of strength, so I just wanted to go with the movement. You can see that we had a retest at this level. So this essentially was a very, very simple trade, because we retested right at this zone, and I could see that markets were very bullish, huge bullish candles. And for me, just looking at the way price was moving on the lower time frames, you can see that for the most part volume was really just ticking to the upside, and at no point did I really see price slowing down. So if we come down back to the 1 minute time frame, essentially I was just looking for some type of entry. I was just looking for some type of entry here on the lower time frame, and you can see once again We did create some form of equal highs in the market, but at this point, I really did not want to mess with any entry with something like this. You know, it really didn't give me too much of a valid reason to enter. So what I did is I let the markets do its thing a little bit more. And then from this point, we had a very, very interesting pattern here, right at the higher time frame zone that I marked out. And from this point, you can see that we did create equal highs somewhat right here, right about at this level. And then we had a strong reaction. What I'll do is I'll clear up the zone. We had, you see these wicks, that's basically showing me that price was doing this, okay? Once it came up to the level, once it came down to the level, it was essentially, price was trying to be driven down, but buyers took control. So essentially the thought is that once price comes back into this level, it's going to go ahead and it's going to continue back to the upside. So once again, still looking to target above these equal highs. And then for the long term, right, with the market being bullish, we could possibly see something like this, right? The market giving us like somewhat of a diamond pattern or whatever you want to call it, where the market consistently makes these lower lows and then boom, right into the lower highs, consolidation here, and then continuing back up. Okay, that's another possibility, and that's actually exactly what happened here on GBP JPY. So you can see we made actually very clean equal highs somewhat, and I was just reacting to this level, and my entry for price here was going to be at 141.378, and this was actually a beautiful entry. 141.378. My stop loss was 5 pips, and my take profit was 25 pips, I believe. Yeah, 25 pips. So this is a 1 to 5 risk to reward, and what we'll do is press play, and we will let this trade play out potentially. Right. Okay. Here we go. Price comes down to entry at 379. I believe it was 379, right? Let's make sure. Okay, 378, 378. Okay, it comes down to our entry. We're now triggered, and then from that point went into very nice profits. And I did go ahead and roll my stops up to break even. And another thing I noticed, right, is that as this trade progressed, we created more equal highs right around this area, potentially giving us another area where we could target liquidity back to the upside. And then we also had some solid demand, right? Had a solid demand level created, and what I'll do is change the color of this so you guys can see it a little better. And potentially we had this level created right above our entry. So that's actually one of my favorite ways to be in the market. When you go ahead and you enter at a price and then demand is created right above the price, it kind of seals your position in somewhat of a safe spot. You see what I mean? So we come back down and we retest the level, and then we come back up, we consolidate once again right below the equal high. So at this point, you know, it was pretty solid. We probably weren't going to go ahead and fall off. You can see what market structure was doing right here, and you can see that we were consolidating. It was just a good chance we were going to break out here to the upside, right? So keeping it fairly simple here, just following price action, following the liquidity, following the overall flow of orders. And you can see that price literally pushes up and just takes liquidity very, very strongly. And if we go here, right as I called the signal, I said just waiting on this pullback, targeting above this range, semi-aggressive trade. This is before. This is right at entry, literally on the wick. And then we go back more to take profits. We create equal highs, and then we run through the equal highs. As simple as that, right? So active in blue, risk-free, aiming to see price purge liquidity above these equal highs, liquidity being hit as we speak. Take some profits when comfortable, and continue to let the rest run risk-free. I'm comfortable taking profits at a 1 to 5 plus trade. You can hold or close depending on where you feel comfortable. If we do break out here, we can expect a decent move up, which is exactly what happened. And then we had the structure here. Looking good, guys, for anyone still in. Be mindful of the way we react around these equal highs. If price decides to break through, it's a good chance we will run up to TP. We also created solid demand, which is what I was just talking about, near our entry price. And then last but not least, we have trade fully completed, literally from entry to exit, just on the pip, right? So take note to how strongly we took out equal highs per liquidity. Trade is complete. All profits can be taken, or you can hold until comfortable. I hopped out around a 1 to 3.5. Final targets would then hit for a 1 to 5, right? So this is what we had next on GJ. GJ potentially was either going to sell off from this level and take out equal lows, or it was just gonna run through these highs and then give us a sell-off, right? So understand that even though like the overall sentiment here for GJ was very bullish, you can still somewhat expect a pullback. Now for me, I didn't want to expect a pullback until we took liquidity right here above these highs. So what I just wanted to see happen here essentially is the market come up, run above the highs, take the liquidity, and offer some aggressive counter trend sells, and then potentially also, since we created liquidity here for buy orders that people want to catch to the upside, you could see that that would just make sense that we would target back below this level, maybe target this zone right here, and then last but not least target that area as potential demand, and then from that point catch a continuation up. So you can see that these two buys that I took at the beginning of last week, or should I say the week before last at this point, you can see at the buys essentially this was going with the trend, and then I believe I entered, where was it, somewhere right here, this was going with the trend as well, and then once we pick up liquidity, right, which is my bias, this was going to be somewhat counter trend, right, since we're breaking highs, we're looking to sell, but it's more in alignment with the overall flow of what I want to see happen here with the markets, right? So if we go back to the Telegram really quick, this is the first point of interest, and I said all I'll be doing is watching the 1 minute / 3 minute time frame in the zone for GJ. To get more in depth, check out this video I have in a course talking a lot about it, but my course is actually being recreated very soon, so there's going to be all new videos. I'm actually in the process of doing that right now. I need to see a solid reason to enter, such as Wyckoff, break a structure, a couple other things, and this was just the point of interest right here. Okay, and there was no reason for me to enter. Looking at the lower time frame, it really did not give me any solid reason to enter sells. GJ still pretty bullish, hasn't shown me anything to sell with. Just going to keep watching as we move through London. If we don't set up for sales, here's the next possibility, and then this is what we have right here. So I sent this markup out right at 3:34 a.m. okay, make sure, yeah, 3:34 a.m. Now, I want you guys to look very, very close at what I want to see price do. I want to see it go ahead, take out highs, and then sell off aggressively, right? Run through, pick up some buyers, maybe take out sellers who want to see price reverse, maybe clear up some orders that entered throughout the drop, and then aggressively sell off. So this was before, and this was after, right? Literally took out liquidity, hit our significant level, and then fell back to the downside. So before right when I posted, it was 3:34, and then it finally dropped off, and the move was pretty much complete by 5:22. GJ went with the script, took out those equal highs before selling off. 1 minute did not show me what I wanted to see for an entry. Then kind of just gave a little bit of value there, and then GU pushed up 200 plus pips from my zone, and this was a loss, right? I took 2 wins and 1 loss. So the week before last was a very, very profitable week, but we took this one trade, right? I'm gonna take you guys through it right now. Okay, so let's go back to Telegram. Let's see what day this was. January 21st. So what I'm gonna do is I'm gonna go find January 21st really quick, and I'm gonna go ahead and go to the replay tool. Okay, yeah, so potentially once we did come up, I was either going to want to see price sell off from this area, right, or potentially show us some type of reaction, because what I was noticing is that we did have somewhat of like most likely some type of retail buyer sentiment, and then once again, if retailers are beginning to buy at some point, we may see a run on liquidity. Now that doesn't mean the long-term trend is gonna change, but me as a day trader, it's possible that I can catch like a run down to here and then catch like a continuation back with the trend. So understand that like a lot of things happening in the markets right here are stuff we don't have access to the data to, but when you look at the charts and you look at the candles, price is telling you a story. So in this case, potentially we're probably going to see some buyers come in, and what I want to see is I want to see price show reaction around that area where we took liquidity and we pretty much made that exchange of orders. So once we come back up into this area, we could potentially maybe run an aggressive move and then run back up to the upside from there. So this was I guess you could say somewhat counter trend, but this was actually a losing trade, right? So what we're gonna do really quick, let's see, what price did I enter at? 141.728. 141.728. Okay, so we're gonna have to let price play out a little bit. I'm gonna let it come up a little bit more. Okay, perfect, right here. So what actually happened is I ended up entering sales a little bit too early. So to come back up to the 30-minute, you could see that we were now reacting with this potential level right here. Potentially acting with this level. And I'm going to go ahead and change this little Let me change my zone back to the normal color real quick for y'all. Okay. So yeah, this essentially was going to be my point of interest for sales. Just potentially watching this area, and then also potentially watching this area, since this is a zone where we did pick up that liquidity, right? And then to look closer, another potential area that could be picked up. So going back to the 1 minute time frame, I had a very, I guess you could say, a real solid entry opportunity to enter throughout this zone. You can see how the market made the high, made a new high, simply broke structure, and essentially I was just looking to catch some type of seller movement. So my entry for this was 141.728, 141.728, just like that. And then my stop loss was 3.5 pips, and my take profit was 30 pips. 3.5 pips, take profit was sitting at 30 pips. So you can see that before the move happened, it looked like a clean setup. So for me, I wasn't really not worried about this loss at all. It met the rules. I could understand why it didn't go my way. It's kind of easy to pick out why it didn't go your way after the fact, but you can see that GJ was just bullish for the time being. But the overall bias was right. We came up to here, and I believe we did sell off from this point. But to look back at the 1 minute, if we press play, trade just didn't respect it at all. It was a fairly quick trade, and then if we come back up, you can see now that we're testing this area that I was looking at as a second point of interest. You can see that we then sell off, I believe, eventually from this area. But for me, I really did not see too much of an opportunity. The only entry opportunity to sell would have been this move right here, and this would have been your entry if you would have wanted to sell off of that point of interest. But you can see that this would have been a fairly aggressive trade because we didn't even break structure, right? We made this higher low and we just retested, and for me, that probably wouldn't have been enough for confirmation. Now, if I was in the mood to take an aggressive entry, maybe I could have went with that one. But like I said, man, I was just looking to short from the run on that liquidity, and then if we come back to here, this is actually going to be an entry, but the price just literally melted, so I wasn't really messing with it too much. And then that was like the last thing I was looking at for the week. So it was a profitable week there, and then I posted like a mentorship video, 45-minute long video, just talking through some strategies, some outlooks, and some tactics that I like to use to get entries, right? Higher time frame structure, identifying zones, and then next is going to be this week that just passed, right? So beginning of the week, I posted this right here. I said liquidity around here at these equal highs around last week's close. If we break these highs and set up for shorts, you can target the zones back below. So you can see that this is a POI for longs with the trend. So actually, real quick, let's check the date of me post. So January 24th at 7:41. So this was Sunday evening that I ended up posting this, and let me check what time frame that was. That was 1 hour time frame. So if we come back to here really quick, we're gonna let the chart do its thing again, and you can see that what did we do around the level? I said that we created liquidity around these equal highs around the weekly close of last week, and what do we come up and we do? We come up and we pull liquidity. We pull liquidity, and what zone do we meet? The zone that I called out as a point of interest. So if we come back up to here, equal highs, set up for shorts near a higher time frame area, melt back to POI, and then target longs with a trend, which is exactly what happened here on GJ, and that's with 100% transparency. Now, you can call out the higher time frame area, you can call out what price is going to do, but if your entry isn't in alignment with it, then essentially the move just happened, just because. So for me, I didn't really get any type of entry opportunity with this move. I was watching on the 1 minute here, didn't really like anything that I seen, was watching here, and I don't believe that price showed me anything here either. So the overall bias of what I want to see price do went with the flow perfectly. Depending on what type of trader you are, man, you could have definitely took advantage of these moves. You could have definitely caught the longs, but for me personally, I didn't find an entry. I showcased the opportunity to my students. I posted it. I actually had a lot of people that took advantage of it because I have a lot of different type of traders that are my students. Some people kind of take what I offer and turn it into like a swing trading approach. Some people kind of take it and just like to execute the way I like to execute it, which is on a 1 minute and going for like real clean risk to rewards. So you can follow the process and you don't like win-loss ratio is almost just doesn't matter when your risk to reward is nice, because you almost always bounce back as long as you find valid setups. So you can see that from the POI that I posted on Sunday evening, price ended up pushing around another 250 plus pips, right? So that was pretty much it for GJ that I posted. And then GU, right? We're gonna go to GU really quick, and I'm gonna clear up some of this stuff here, and let's see where we were for GU. So to go back to GU, I drew a POI right here. I drew out liquidity, and what we're gonna do is we're gonna bring this back. And so I drew out this for potential sales. And then if we come back to here, POI for buys was this area. We'll bring this back to here. So POI for sales were here, POIs for buys were here. And then essentially we could have seen price probably move back down to this level as well. So a couple possibilities, and of course GU is correlated to GJ in a very similar way. But something that you could have looked to do is you could have looked to sell from here, looked to buy from here, or if that didn't take place, you could have just looked to let price come back down, potentially look to buy for here. So you can see that my overall bias for the GBP was just bullish, right? Really looking bullish. So from that point, shorts equal target liquidity below, and then guess what we do? We short off very strongly, and then we come back down, and let's actually check really quick. Let's see what zone I have marked up. So POI for buys, let's go back to the 60-minute right here. Okay, so we run through it on GU actually, but then we go back up. So you could potentially just watch these areas for entries, right? Okay, so next is going to be Euro USD. So let's go to EU really quick. And this was a trade I was actually looking at to end the week, but we didn't really see too much here on EU. But to zoom back at what we had going on, take bar replay off. And this was January 24th. Okay, so let's see what we got here. So to go back to the chart really quick, you can see how we created equal lows. It's fine where we created these equal lows at, right about here. Almost equal lows, I think. And then from that point, my point of interest was going to be, let's see, for some reason this pair isn't looking the same. Oh, okay, it's the 4 hour. That would make sense. It's the 4 hour. Okay, yeah. So we come up, we push up, we show some reaction, and my point of interest for Euro USD to catch a long back up was going to be this little mini zone, and I'll just put like the airplane like I did in the other one. So potentially I want to see price push back to the upside. Now since we did have liquidity below and we did have the equal lows, one possibility was going to be that we've seen some reaction. Maybe we come up, we create equal highs, and then we break, we come down, we pull liquidity, and then maybe we come back up, either get bullish or we get bearish. Really depends. Maybe we'll see some more bearish pressure on the euro very soon, but that really depends on a few different factors. But like I said, I called this out as point of interest, and then for longs, and then beautiful, literally wick the area. And if you would have found an entry on the lower time frame, that's like 100 plus pips. But we'll see what it does from here on out, because the only pair that I really look at during the week is going to be GJ, occasionally GU. Besides that, I'll do like pre-week like Sunday markups, and I'll just send markups out to my chat. But you can see that everyone played out, each one played out. But for me personally, back to what I was talking about with the losses, man, like this week here was somewhat of a, I'm not going to call it a bad week. I mean, both trades that I took met my rules, but unfortunately the markets just didn't really go with what I wanted them to do. And for me personally, man, GJ, like there's just been a lot of nonsense on GJ recently. I've seen a lot of weird price action, definitely not usual price action, but you could see that I was looking to catch longs here, and this ended up stopping out. And then you can see we show reaction, came up with the bullish candle, and the price sort of broke this up candle here. I would have went risk free, because from that point it'll probably pull back and then broke through those highs. But this ended up being a loss. And then GJ pushed 100 pips from my point of interest that I sent out. And then this was actually my entry. This would have been such a beautiful entry. This would have been a very clean entry, but my entry was going to be at 141 point whatever price this was right here, but ended up missing, literally so close. And that would have been, of course, sent out as a signal. And that would have been like a 1 to 10 trade. So it's literally the smallest things, man, can make your week be extremely profitable, or make them be a losing week. So in this case, I lost 2 trades. I follow my rules. You know, if I would have entered early, it could have went well. But at the same time, I try to understand, man, that like bad habits, when you do something bad in your trading, you break a rule, but you get a good outcome from it. Like, let's say you enter early, you enter when you know you shouldn't be entering, but it ends up going well. It's just reinforcing a bad habit. So I try to stay away from entering early, and I just always wait for my rules to be met. I try to eliminate any FOMO, and even though, you know, it kind of hurt missing the 1 to 15, but it's gonna happen, you know, because a 1 to 15 essentially would allow me to lose like 10 to 15 trades in a row. Taking into consideration brokerage fees, I'd probably say like 12 trades in a row I could lose stress free, you know. So for me personally, that would have been a very beautiful trade. So like I said, week before last was very profitable. This week I ended up losing 2 trades, but I'm going to continue to stick to the plan, man. That's what trading's all about. And then selling GJ, right? This was more shorts that just didn't go our way. This was like a potential Wyckoff distribution back to the downside around a level. And then that's pretty much it, man. So that is all I got for you guys throughout the last couple of weeks. So looking at GU, this was going with the trend. Looking at GJ, this was going with the trend. Looking at this entry, this was just a very, very beautiful trade setup. And what I like to do is I just like to reflect on these trades a lot of times, because this previous week, 2 losses, no wins. So I like to tell myself that setups like this are always going to show up. Then they're going to continue to come into my trading plan, and when the time comes, I'm going to execute on them. And I'm still profitable for the long term, but had somewhat of a losing month for January, man. But I'm going to continue to stick to what I got to do, and that's what trading's all about, man. Try to make it your goal to be in these markets 5 years from now, not just 5 months from now, but 5 years from now. Because if you can maintain 10 to 15% per month in these markets, you will compound to a very nice level. Trust me when I say that, man. So that's pretty much it for all these different trades. Just looking at liquidity, looking at true price action, kind of understanding retail sentiment, and not necessarily going against the 90% all the time, but trying to look at the markets through multiple points of view. Kind of similar to the way that even though you would see like we had to close above the trend line, that means nothing with the way that I approach the markets, but it helped me understand that, okay, maybe sellers are looking to get some pressure in on a pullback, and we also have equal highs up here. I can target that strong move to the upside to pull liquidity from there. And then we also have like the market maker cycle, right? Contraction, expansion, pulling back into our zone, potentially targeting new highs right there, man. So yeah, man, we're gonna have a great month, start of a new month, February. We're just gonna continue to do what we gotta do. So I hope y'all enjoyed this video. I hope y'all got some value from it. It's been your boy BG. If you haven't already, make sure to subscribe to the channel, and if you did get some value from it, I know this is a pretty long video, but I just feel like it was due. It's been a couple of weeks since I posted. Wanted to take you guys through with what I was doing here in the markets, man. So I hope you guys all enjoy your weekend. Make sure to get some rest, because it's gonna be Sunday. Get some rest and prepare for the week, and it's gonna be a great month, man. I hope y'all enjoyed this video. It's been your boy BGFX. I'm out. Salute.